All right, guys, how's everyone doing? This is Paul Singh with bullsonwallstreet.com. Today for the weekly swing, we are going to talk about 7 different stocks to watch for 2023 and, of course, potentially trade. We're going to go over some common themes related to the stocks we're watching, 7 of these stocks and why, of course, we like them. And then we're going to talk a little bit about the Christmas sale that is coming up. Really good deal, some of the best of the year, 40% off. Of course, if you want to join the swing report, this is a good time to do that. Before we get to that, let's talk about these 7 stocks. And before we get to the stocks themselves, let's talk about certain common threads all of these stocks have that put them on our list here. Number 1, these stocks have been relative strength leaders, either throughout the year or over the last couple of months, essentially since this last earnings season. Stocks that have led the market while SPY has been in this kind of back and forth here, big pullback, run up, pullback again. Stocks that are doing better than what the market is doing, essentially. So all of these 7 stocks have that common theme. We also picked stocks in different industries. So think about your trading as a portfolio, and you don't want to get stuck in one area that might get hit. So as you can see here, these are all very different stocks from very different areas, and they tend to be leaders in those areas. 3, a lot of these stocks follow some macro themes that we will talk about related to their industries. All of these stocks have great recent technicals. We're technical analysts. We're talking about all this other stuff like macro themes. But at the end of the day, to place our trades, we're looking at the technicals. Also, these stocks are of average volatility. In a market like we're in right now, you tend to not want to trade the most volatile stocks. If you get caught, you can get caught to the downside really hard. But again, you want some volatility as well because you want to be able to make money when they do run. So most of these here have average volatility. This is a volatility number I use here. And if you look at most of these, they're going to be somewhere in the 30 to 50 range, which tends to be average volatility. So let's get started with number 1 on our list. That's Starbucks, relative strength leader, bottom formation breakout, and it had strong earnings. We can see the relative strength very easily. All we have to do with all these relative strength leaders, there's a lot of things we can do. We can compare where they are to the 50-day moving averages. We can take percentage gain from a previous date. The easiest thing to do here is just eyeball SPY with all these things and compare the stock. And you can see if we look at where SPY is under the 200, under the 50-day moving average, not too far off the low here. And then if we look at Starbucks, we see a very different stock, right? The clearest thing is above the 50-day moving average, above the 200-day moving average is very strong here. Not only that, but it had a strong earnings reaction, which caused a breakout out of this kind of cup and handle bottom formation. So you can see it essentially peaked in mid-2021, had been in a strong downtrend like a lot of stocks were. And instead of just kind of going sideways back and forth, this thing has exploded since it's made its bottom here. And now the earnings breakout got it to break out of its range. It has pulled back and is now a nice trend pullback play. If we think about the technicals, everyone needs coffee. Starbucks is doing really well, even in an inflationary environment, even in a recessionary environment, Starbucks seems to be holding up pretty good here. So Starbucks, number 1 on our list. These are not necessarily in order, but I do like Starbucks going into 2023. Again, these aren't trade recommendations to get into trades now, although I actually do like Starbucks now. These are just stocks we should be watching to potentially trade either now or in 2023. Number 2, Facebook, or Meta as it's called now. And the reason we like Meta, 1 is a potential capitulation event, which was its last earnings, and then a breakout and a potential gap fill coming up. So let's take a look at Meta here. If we look at Meta, the first thing we notice, one of the most beaten down stocks of 2022. Like many, it peaked in 2021, but look at this move down. I mean, we made a low here that I have to go on the weekly to pull it back here and actually see where it was. This is the lowest point it had been since 2015. So definitely getting hit hard. Everyone knows about the metaverse and the flack Facebook Meta took for that. But it felt like a capitulation of it. I don't have volume on my chart here. This is a money flow measure, which takes into account volume, but huge volume coming in on this gap down. And it feels like a capitulation event, like we've made a bottom here. And what's interesting here is since this poor earnings event, it has shown a lot of strength. And sometimes we'll see this. And this is a very good kind of contrarian indicator or reversal indicator when you have bad news and then recover from that very quickly, which Meta did. You can see here by about 2 weeks, it was already above where it gapped down from. And as we can see now, remounted the 50-day moving average. And again, while the market has been doing this, Facebook has been doing this. So a lot of relative strength through this period above its 50-day moving average. And now a potential gap fill. And as we're looking towards 2023, this is the range I would look at very closely because this is one, a gap fill, which is very important. And two, it's the level it was before this big earnings spike down. So we'll call it right around 129, 130 in 2023. And we're sitting at 120, so it's only 10 points away. So in 2023, if Facebook can get above that level, I think we have a potential good entry in Facebook. Now let's take a look at Netflix, which is a recent relative strength leader and is in an area that has been strong, which is media. So let's pull up Netflix here. And first thing we'll notice is, again, relative strength. The stock bottomed here in October before its recent earnings breakout and has essentially, wrong ticker, actually. That didn't sound right. Here, you can see here, it actually bottomed way back here in May. And since that point, has gone from 164 to 300. Huge move. While again, what has the market done since that time? A whole lot of nothing, basically. So we have a relative strength leader here in Netflix. And, we talked about that potential gap fill breakout in Meta. Netflix is already there. So, technically here, it's been making higher lows, which is very good, right? We have a trend in place and it has been making higher highs. And now it is coming into an extremely strong resistance level. And if it can break that level, and again, this was an earnings breakdown and it had an earnings breakout right here. So we have strong earnings recently from Netflix, but then it would invalidate these poor earnings way back in April if it could get up here over 335 and we're sitting at 300 now. A couple of ways to play this. We could play this right now and enter at the 50-day moving average and anticipate the break, or play it to that level, get out and get back in. Either way, or just play it safe and wait till this thing can get above, say 335, somewhere in there. And then so much room to the upside here still. If we were to hit this gap fill level, that's all the way at 500. So relative strength leader. If you can fill and break out, remount this gap, definitely a potential entry in 2023 for Netflix. Now let's look at Goldman Sachs, very different industry here in financials. Financials have been strong. We can look at XLF here and see, again, beating the overall market, has pulled back, was really a relative strength leader a little while ago, has pulled back some, but still outpacing the market. And of course, one of the relative strength leaders within financials is Goldman Sachs. Maybe it's a little bit of a more boring, slow play, but still, look at recently, since October, the thing has gone from 289 to 350, actually had peaked here at almost 400. So this thing can make some big moves. And you see where it had its high. And if we pull this thing out, you see more of the relative strength compared to what the market has done. And we're not that far off these highs, which are around 426, and we're sitting at 350 now. So this could make a pretty explosive move to the upside here. In terms of entry, I would definitely wait until it could remount these moving averages, which is, again, not far away, or maybe even wait for this gap fill here. Once you do that, again, a lot of room to the upside here for Goldman Sachs. Now let's look at Monster. This is in beverages. Beverages have been strong. There's actually two of them I really like. I only put Monster on our list. I'll pull up the other one in a second here. But let me actually pull up the weekly here, and you can see just how strong Monster has been. And notice here, we've had about a year and a half of essentially consolidation in this stock, and it really recently broke over the all-time high range. And notice in the past when it has done something similar, it has gone on some very strong runs. Here's 2020, almost the exact identical pattern as what we're seeing now, and about the same length of time in terms of consolidation. Maybe this one was a little longer, but broke out at 71 and then ran all the way to about 100. Did the same thing here. There was a long consolidation, a break of the high here around 30, and very quickly went up to 56. So we have another big kind of technical play here in terms of an inverted head and shoulders, breaking out to highs. We already have the breakout here and has now tested that level, which is good. If the market were to run here, we could see a really big move in Monster. And notice also the relative strength recently. Again, market has been doing this, Monster has been doing this, and that's what we want to see. Another one I like, we won't go into the technicals in too much detail, but a similar pattern here in Cell H. This is also in beverages. Beverages have been strong, and we see a number of beverage stocks that are showing extreme relative strength and are actually at not only 52-week highs, but all-time highs, which is hard to believe in a recessionary environment. So these are very strong stocks. Okay, number 6 on our list, we're going to go with the China ETF FXI. China has been very strong recently, relative strength leader. You can see FXI has gone from 20 all the way to 28 currently, had hit close to 30. Now, this is maybe a little slower than we'd like in terms of an ETF. So we can always use the leveraged ETF, which for this would be yin, which gives us 3 times the volatility. And you can see this in that same period has gone from 19 to 45. So much bigger gain. Obviously, you can go down much faster as well since it's 3 times the volatility. But what do we like about this? And we'll analyze it from the underlying, which is FXI. We can see here China has been in a very strong downtrend, a trend of lower lows and lower highs. And it has not broke that yet. But what's interesting here is this breakout, this bear market kind of move for China has been much stronger than the previous ones. And now if it can remount the 200-day moving average, it'll be the first time it does that in quite a while. And then if it could break this range right here, which is a little ways away, it would actually make a higher high. And by that time, it would also have made a higher low. And we'd have essentially a break of this trend. The trend break actually happens on the 200-day moving average, but the overall pattern break would happen up here. So 2 spots you can be looking at in 2023 for China. Much quicker if you're more aggressive. Jump in on the break of the 200-day moving average. If you want to play it a little safer, wait until we get confirmation of this range. We also see some macro trends in China, which are helpful. One, they have lower interest rates than we do here, which is obviously better for their consumers. So we'll be watching China very closely. Now, the reason I have a bunch of China stocks here, you can see the list we follow. There's about 28 that we really like, and there's some others as well. The reason I'm using for this FXI is it's safer. We all know about the Chinese government. They can come after companies. If you want to protect yourself from that a little bit, you can go with the ETF, which is a little bit of a safer play. And then finally, to play the big macro kind of trend in agriculture and industrials, we can go with what sounds like boring John Deere, the ag kind of tractor machinery company. But it's not so boring when it's at all-time highs. And we can see here recently, the stock has run from 283 to 443. So nothing boring about that. A little bit extended. And not a lot of stocks are this extended at all-time highs. This is a very similar pattern to what we saw with those beverage companies. Breaking out to highs. I believe this is all-time highs. All-time highs. And if you look at the history of this stock as well, when it breaks all-time highs, you tend to see some big runs. There's expected macro trends in agriculture. We can pull up DBA, and you can see here just how strong ag has been. And DE is a good way. John Deere is a good way to play that. In terms of potential entries for 2023, we'd probably want to see some technical patterns develop, which aren't there yet. You could easily just play a break to the high, which it's almost there right now. So just a break of this range would be an easy play as well. And of course, you can see the big earnings breakout here as well in John Deere. All right, so 7 stocks to be watching. We're actually watching a lot more stocks. We're interested in many stocks going into 2023. We talk about them every day in the Swing Report. Of course, we have the chat room as well. You can see a summary of today's report in there. We have the big Christmas sale, 40% off, some huge deals here. If you want to not only be a Swing Trade Report member, Swing Service member, or any of the chat rooms, but also if you're a day trader, and we have some bundles here if you want to do both. So check that out going into Christmas and the New Year. Some of our best deals of the year are going on right now. And of course, if you have any questions at all, shoot me a message anytime.